welcome to the Deep Dive.
Glad to be here.
You're joining us because, you want to get a handle on what's happening right now with air cargo, tariffs, the economy.
What's fast, right, without all the noise.
Exactly. So our mission today is to connect those dots for you. We'll use the latest info to give you a hopefully clearer picture of the near-term outlook.
Yeah, we're going to unpack these recent shifts in air freight rates and this very real possibility of new EU tariffs on U.S. goods.
Big topic right now.
Definitely. And how these things, plus the latest trade figures, kind of weave together and what it all might mean for the wider economy, in the next few months.
Okay. And for this deep dive, we've got a decent stack of sources, news reports on the potential EU tariffs, that U.S. trade deficit.
Right, the record one.
And of course, the nitty-gritty air cargo industry data on freight rates.
All the key pieces.
All right, so let's dive in. These potential EU tariffs first. What's the main story we need to grasp?
Well, the headline is really a potential significant ramp up in trade tensions. Yeah. The EU is seriously thinking about tariffs on potentially up to $100 billion worth of U.S. goods.
Wow, $100 billion. That's substantial.
It is, and it's framed as a direct response to possible U.S. tariffs on things like pharma, semiconductors, critical minerals, lumber, even trucks. So, this level of tit for tat could really make businesses, rethink things, supply chains, export plans, all that stuff.
On both sides of the Atlantic, presumably.
Absolutely.
So that 100 billion euro figure, is there a timeline attached to this? When might we know more?
The word is that Brussels might share their initial ideas, their proposals, with the EU member countries as early as this Wednesday.
This Wednesday.
Yeah. And that kicks off about a month-long consultation period. So it's not happening tomorrow.
Right.
But it shows they're actively preparing a pretty strong response.
And it's worth remembering, this isn't coming out of nowhere, is it? There are already U.S. tariffs impacting the EU.
That's exactly right. The U.S. currently has those 25% tariffs on EU steel, aluminum, and cars. And then there are these other reciprocal tariffs. They're at 10% now, but there's talk they could jump to 20%.
After that 90-day pause ends.
Precisely. So the groundwork for more friction is unfortunately already there.
Now things get even more tangled because China is also part of this conversation, isn't it?
Oh, absolutely. You've got Xi Jinping basically telling the EU, don't let yourselves be bullied, clearly pointing fingers at U.S. trade actions. He's really trying to position China as, the more reliable, stable trading partner in all this.
Interesting move.
And related to that, China also confirmed they're suspending sanctions against some European politicians, maybe trying to smooth things over with the EU while tensions rise with the U.S.
Could be. Okay, so while this potential tariff storm is brewing, we also just got fresh data on the U.S. trade picture itself.
Yeah.
What did that show?
Well, it showed a pretty dramatic surge in the U.S. trade deficit for March. Hit a record $140.5 billion.
A record. Wow. What drove that?
It was mainly imports. They jumped 4.4%, reaching $419 billion.
Hey.
Exports also went up, but only slightly, to about $278.5 billion.
So imports way outpaced exports.
By a lot. And it looks like a classic case of businesses trying to get ahead of potential new tariffs.
Pulling imports forward, you mean?
Exactly. Stocking up in March to avoid potentially higher costs later. It's a bit ironic, actually, since leveling the trade deficit is a key goal of these U.S. trade policies.
Right. The anticipation seems to have temporarily done the opposite.
For March, yes. We'll need to see the April data, which comes out in early June, to get a clearer view of what happened after that Liberation Day tariff blitz everyone was expecting.
Makes sense. Okay, let's pivot then. The air cargo market. How does that fit into this picture? What's happening with freight rates?
We're seeing a definite downward trend in global air freight rates right now.
Oh, really?
Yeah. The Baltic Air Freight Index, the main global benchmark, fell quite a bit, 4.5% in the week ending May 5th. And what's really notable is that rates have now dipped into negative territory compared to last year, down 5.7% year on year.
That is a shift. Because earlier in 2025, they were holding up okay compared to 2024's strong market, weren't they?
They were, yeah. That 2024 market was pretty heavily influenced by tariff talk too, remember? So this decline now could suggest demand is softening a bit.
Or maybe trade patterns are shifting already in anticipation of these new potential tariffs.
That's also very possible. Or maybe a bit of both.
Is this rate decline happening everywhere? Or are there regional differences?
Definitely regional variations. If you look at shipments out of China, it's mixed.
Okay.
Rates from China to Europe were actually up slightly in the latest week. but down to the U.S.
Oh, interesting.
Hong Kong overall was down week on week and year on year. Same for Shanghai. And there are reports spot rates from Hong Kong to the U.S. are falling even further.
Right.
Plus, you're seeing rates drop from India to the U.S. and from places like Vietnam and Bangkok heading to Europe. So generally softer out of Asia.
Got it. And what about freight leaving Europe or the U.S.?
Outbound Europe, rates are falling on the big transatlantic lanes and also routes to China. Stable to Japan, though.
Okay.
Frankfurt saw a weekly drop, about 5%, though it's still slightly up compared to last year overall. But London Heathrow took a bigger hit, down sharply over 10% in the week, especially on lanes to Southeast Asia. And that route is way down year on year, like negative 26.8%.
Wow, quite a drop for Heathrow. And from the U.S.
Outbound U.S., rates are down going to Europe and South America, actually ticked up slightly to China.
Okay.
Chicago fell quite a bit week on week, similar to London, down about 10%. But, and this is interesting, it's still way up compared to last year, like over 30% higher year on year.
Huh. So some mixed signals there still, even with the weekly drops.
Definitely. The year-on-year comparisons show a more complex picture than just the latest weekly move.
Okay, so let's try and tie this together. We've got this threat of EU tariffs looming.
Right, big uncertainty factor.
We've got that record U.S. trade deficit in March, probably boosted by companies importing early to beat tariffs.
The pull-forward effect, yeah.
And now we're seeing global air freight rates generally declining, especially week on week. How do these pieces interact as we look ahead, near term?
Well, it sets up a pretty dynamic, maybe even volatile near-term situation. That threat of EU tariffs, it could definitely squeeze transatlantic air cargo demand even more.
Pushing those rates down further?
Potentially, yes. Accelerating the declines we're already seeing on those routes. And that March trade deficit surge, if businesses really did pull imports forward,
then demand might soften in the coming months.
It could, yeah. As they work through that inventory they brought in early, it's like everyone rushed to the door at once, and now there might be a bit of a lull.
It does create these sort of distortions in the data, doesn't it? Makes it hard to read the underlying trends sometimes.
It really does. And what's fascinating is, if you look over at container shipping, the ocean freight side, you see something a bit different. Trans-Pacific container rates, like from Asia to the U.S. West Coast, they're holding relatively firm.
Why is that?
It seems like capacity, the ships are being shifted away from that route and onto the Asia-North Europe lanes.
Ah, okay. So less supply on the Trans-Pacific keeps rates up.
Exactly. And moving those ships to the Asia-Europe route is helping push rates down there. We actually saw an 8.6% capacity cut on the Far East to U.S. West Coast route after those new U.S. tariffs on China were announced.
So air freight rates are falling globally, but container rates to the U.S. are holding up better, partly due to capacity shifts.
That seems to be part of the story. It could mean different goods are moving, or maybe ocean freight is reacting differently to the trade policy news right now.
Interesting divergence.
Yeah, and some people think container rates are staying up partly because there's still this background expectation of some kind of China-U.S. trade deal eventually.
Whereas the EU seems less inclined to feel pressured right now.
That seems to be the stance, yes. Resisting perceived bullying, as you put it. But even in container shipping, there are warning signs. Some carriers are apparently having trouble filling their ships in May, despite expecting demand to pick up.
So even the firmness there might be a bit fragile.
Could be. That adds another layer of, uncertainty.
Okay, so wrapping this all up, we're staring at a scenario where potential EU tariffs are layering more uncertainty onto global trade flows.
Definitely a key factor to watch.
The U.S. trade deficit hit that record, likely skewed by companies reacting to tariff fears.
That March number tells a story about anticipation.
And global air freight rates are generally trending down, which might be an early sign of demand softening, or maybe trade just finding new routes, or both.
It's a signal, for sure, reflecting softening demand or those shifting patterns may be linked back to the tariff worries.
So the near-term picture looks, complex, lots of moving parts.
Very much so. The actual implementation of any new tariffs, how big they are, and how global trade relationships adjust, those are the big unknowns that will shape the next few months. It really connects the trade policy, the shipping markets like air cargo, and the overall macro economy.
So as you, our listener, are thinking through all this, maybe consider this. How are businesses actually playing this? If you're involved in international trade, what strategies are you likely putting in place right now?
Yeah, balancing tariff risks, shipping costs that vary by mode, and just the general health of the global economy.
What specific signs or data points would you watch most closely over the next, say, 3 to 6 months to gauge the real impact of all these interconnected forces? Something to mull over.
Definitely food for thought.
Thanks for joining us for this deep dive.